I would venture to say that this mixture of the end of the bull market in government bonds and the takeoff we've seen in gold and silver since the beginning of last year is telling me that the fiat currency regime, which was orchestrated with the help of the Bank of England, LBMA, the Fed, that game is over and they can't hide it anymore. Thursday, March 5th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at the central bankers' magical supply of gold and silver. Yes, magical. And that's coming to an end, though. And that's why we've seen gold and silver rally so much since the beginning of 2025. That's why we're seeing government bond yields remain elevated and not even drop in spite of this war in the Middle East. And yeah, we're going to also look now at some of the headlines, what's going on in the Middle East vis-a-vis the war, well, the attack on Iran and the reply from Iran, of course. We are in day 6 now. And I wanted to bring up a little bit of history. A lot of you know that I like to look at history because there's an old saying that those who don't learn their history, are bound to make the same mistakes again. And learning history doesn't really help you predict exactly how things are going to end up, but it gives you an idea. So I've always heard and read about how when World War I started, people were being told that the war would be over by Christmas. Yes, Christmas 1914. And that war, according to Wikipedia, officially started July 28th, 1914. And for some reason, I have a bad feeling about this current war. Yes, last year there was a 12-day war, right? But nothing was kind of sorted in terms of the problems between the warring factions. So that's why, I'm not too optimistic. And the longer wars go for, the more expensive, not just in lives, but also treasure things become. And the worst part of war is after the war, and that's for the general public. The worst part is after the war because the general public is always lumbered into paying for the war via inflation, taxation, yes, while the very wealthy who own the big corporations that are involved in making millions and billions, well, they make out like bandits. The bankers make out like bandits as well. And that's what Smedley Butler, Brigadier General Smedley Butler, wrote about in War is a Racket. I highly recommend that. And I saw that a brave Marine yesterday had his hand broken for protesting in Congress, I think in one of the committees, and one of the senators there helped break his hand only because he said that Americans are not supposed to be fighting this war. Let's look at the mainstream media because there's always the fog of war, right? The old saying that the first victim of war is the truth. So I want to give the mainstream media a bit of a chance as well. Well, Bloomberg says Iran continues strikes as Middle East conflict enters 6th day. Trump lauds U.S. war effort as Iran vows to escalate retaliation. U.S. Senate clears way for Trump on Iran war despite stark divide. What else? FT. Pentagon eyes Ukrainian interceptor drones to counter Iran. And that's one for the books. That's ironic, isn't it? That now Ukraine is providing the U.S. with arms. Pretty interesting. Middle East war, FT. U.S. in talks with Iranian Kurdish militants over anti-regime operations. Yes, I've heard that they want to get boots on the ground there, maybe U.S. Special Forces. Well, one thing I can say is there was a war in that region back in the 80s, and Iran beat Iraq quite handily. It was a long war, and Iraq at the time was backed by the United States. So, yeah, this is all getting very interesting. And as I said, the longer this drags on, the worse it is for the finances of the United States, for the finances of Israel, even though I'm not sure, I don't follow that, but I guess it's closely related to the United States, right? Israeli financial health. And now we go back to gold and the central banks. And I read a really interesting article on Substack from my friend David Jensen, and I'm going to put a link to it below in the description. And I even have a playlist for the interviews I've done with David. You can check it out up here. I'm going to put it up here right now. And if you want to learn more about what the LBMA, the London Bullion Market Association, has really been since the late 80s, along with COMEX, yeah, watch some of these videos. But in a nutshell, with the Margaret Thatcher reforms of financial markets, it was called Big Bang. The Bank of England was given the power to run the LBMA, but LBMA, of course, is self-regulated, and through the LBMA and the COMEX, they were able to basically create this spot cash contract over the counter. It's traded in the foreign exchange market, really, LBMA, gold and silver. But what they're able to do is that they were able to trade a promise as physical for cash delivery, and even allocated gold and silver. And the reason why it worked for so many decades is that there is very little need for physical gold and silver. The major banks, financial institutions, investors, they didn't really feel the need to hold physical gold and silver. The dollar was king. Treasuries were going up in value since, let's say, the early 80s up until 2020. Yields kept going lower. Treasury values kept going higher. Who needed gold and silver, right? Well, they only used it to speculate. Sometimes there'd be people who'd want delivery, but they could cope with that, even though the LBMA market was highly leveraged, of course. And in this article today, David Jensen goes over that, but he also goes over the fact that the silver market leverage is increasing. Distress at major silver exchanges, and they're highly leveraged. What does that mean? Well, they're trading a lot more silver relative to actually how much silver they have in their vaults. And why is this critical now, as he says here in his article? Well, because there's been a silver deficit for years now. I think there's going to be another 300 million added, according to UBS. That's what he says here. And the world, of course, is breaking apart in terms of the globalization, is becoming fractured. And paper won't do. There's a rush as well for critical minerals. Hard assets are becoming more and more important. And the bond market, most important of all, treasuries and other government bonds, they've been in a bear market since 2020. And I've shown you many times, if you've been watching me for years, this long-term chart of the 10-year yield, US 10-year yield. You can see that the downward trend, which is very positive for treasuries, the dollar, and keeping gold and silver under control, that trend has been broken, which means yields now are going up, interest rates are going up, and it's a bear market, and bond prices are going down. And that's why central banks, sovereign wealth funds, big investors now want the real physical gold and silver, because treasuries and other government bonds are becoming risky. Ever since this war kicked off in Iran, in the Middle East, U.S. Treasury yields have risen, and they're up this morning here as I speak. And it's 8 a.m. London time. We've got the 10-year yield up another 4 basis points, approaching 4.15. We were below 4% before this war started. The 30 years up another 4. It's approaching 4.80. So not good. And I would venture to say that this mixture of the end of the bull market in government bonds and the takeoff we've seen in gold and silver since the beginning of last year is telling me that the fiat currency regime, which was orchestrated with the help of the Bank of England, LBMA, the Fed, that game is over, and they can't hide it anymore because investors have woken up, or a lot of them have. So David Jensen says here, silver critical, with only a fraction of annual physical silver demand held at primary exchanges globally, and with increasingly restricted market liquidity of silver, silver's price warning signal has been sounding, along with gold, that all is not well in central banks' fiat currency world. Interest rates have broken higher out of a multi-decade downward channel for government bonds and are following gold and silver's path higher. Well, there you go. That's what I told you, and it's broken that relationship that the mainstream economists and central bankers thought would always hold. And what is that? Well, that if yields started going higher, gold and silver would go down because real yields would be higher, right? That's not happening. So I'm just going to summarize here the leverage. And then you can read this whole article. I'm going to put it in the description, a link. It says silver leverage. These primary silver markets, so the primary markets are the LBMA, the COMEX in the US, the Shanghai Futures Exchange, and the Shanghai Gold Exchange. All share brutal leverage with far more claims than there is metal available for delivery. The greatest leverage problem lies in London, where the vast majority of claims traded in the London silver market, are for cash spot silver with immediate delivery on demand. Well, in the past, that wasn't a problem. So all these primary exchanges only have 199.3 million ounces of silver. That's what David Jensen has estimated. And yes, he says here, leverage works both ways, right? He says, with the growing global silver shortage, the world's major silver exchanges currently have 199 million of vault stock available against billions of total claims in the market. And UBS estimates that the global market will see another further 300 million of deficit of silver supply in 2026. Of concern is that since the onset of the attack on Iran, government bond yields have run higher due to selling of these bonds. We can be sure that given the global run on physical silver and gold over the past few years, this was not the result that was hoped for by debt-reliant governments. So one of the reasons I'm talking about this today is that I saw this post on X this morning by Oriental Ghost, and you also have Make Gold Great. He retweeted this or reposted it, and it says, breaking: 2 of China's 4 biggest banks just sold out of investment grade gold bars, right? So Bai says, just in, investment gold bars on the apps of the Industrial and Commercial Bank of China, ICBC, and the Agricultural Bank of China, ABC, are sold out. The Bank of Communications app also does not sell investment gold bars. ICBC and ABC are the one of the 4 major banks in China. And then I want to bring you back an article from almost a year ago that I covered very closely when gold was at 2,700 and silver was trading around 30. And I said at the time, and I'm going to put that video up here as well, that this was highly significant, that this LBMA magical supply, magical whatever, conjuring up of gold and silver, right? This was finished, right? Because back on January 29th, 2025, the FT reported gold stockpiling in New York leads to London shortage. LBMA is supposed to have all the gold and silver in the vaults, right? But when people actually ask for physical, a little bit of physical, we saw what happened last year. Well, there was a 4-week to 8-week wait for spot cash delivery, right? And we had the deputy governor of the Bank of England, Dave Ramsden, come out and say, well, the problem was that gold is heavy, right? That was the infamous explanation, right? And ever since then, gold and silver have gone through the roof. And now we're seeing shortages in China. They're not providing gold. The silver supply hasn't really improved. If anything, it's getting worse. So what I'm trying to say here, in a year's time, things are going to be a lot worse for the central bankers, and hopefully a lot better for you if you've been stacking gold and silver. I'm not making price predictions, but if I had to, I would say would be a lot higher. And I did say in my video, in which I covered this FT story from a year ago, that was gonna help gold take off, and silver has taken off as well. Of course, we were at 30, and despite all the shenanigans going on in the silver market of late, we've almost tripled since. And you can deduct what I'm thinking here about the next 12 months, right? If gold has gone from 2,700 to over 5,500 in the last year, right? And silver is gone from 30 to like 120 in the same period of this shortage. So yes, it's not going to get better. And I would say all the conflict in the world, the war in the Middle East, and trade wars, tariff wars, the rush for commodities, they're trying to safeguard them. These are just symptoms of the collapse of the fiat currency system. And the canary in the coal mine, well, there's more than one canary. There are a few canaries. There's the gold and silver price, and there are treasury yields. So just keep an eye on those. And I think, you will be protected, in my opinion, financially. With that, then, I'm going to wish you all a very good day. Take care. Bye.